Hello everyone, a very good morning, good afternoon, and good evening to all. Myself Vaibhav. Today's session is devoted to the FOMC announcement, which is scheduled for latter part of the day. We have this event, which is going to be the major market mover. So today's session of market movers is aptly titled as Countdown to FOMC. All the segment, most of the segments of the market, even I think commodity segment is not particularly affected, but still, even we have there the example of Dr. Copper. And apart from that, the currency segment and the equity segment are, of course, always tuned in to the announcement coming in from the FOMC. And now this is the monetary policy decision. But we are not expecting any changes in the interest rates, the federal fund rates here, and the price band. The interest rate band actually is likely to remain unchanged at 0 to 0.25%, and also no change is likely to be announced in the asset purchase program, the quantitative easing program as well. So there, we are not really expecting any significant announcement coming in from the Fed on the policy front, but there is the meeting which will be having the economic projections. So here, the more important factor is the forward guidance and the economic projections per se, and we will be getting the dot plot after almost 6 months. So this is the first time the economic projections will be revised, factoring in the impact of this disruption caused by coronavirus outbreak. So from that perspective, it is going to be of high importance, and we will see significant impact happening on the financial instrument. And in today's session, we are considering the DAX and the USD and both of these instruments are likely to be impacted by this announcement and the accompanying economic projections coming in from the Fed. Now, coming to the data, what we have got so far, we got the inflation data for the China, and here, as expected, the CPI has declined to 2.4% in terms of year on year for the month of May compared to the reading of 2.7% for the month of April, and this decline is in line with the expectation, as I said. And if we consider the month on month figure, the reading is at minus 0.8, so that you can even consider on the monthly basis, most of the major economies across the world, including China, has entered into a deflationary zone. Even the CPI numbers, which we are scheduled to get in couple of hours, are likely to show a decline in terms of month on month. That is also, you can consider a deflation scenario. And in terms of year on year, though there will be growth in CPI, but it is almost flat, 0.2%. And not long back, only a couple of months back till Feb, we were used to seeing the CPI numbers pretty close to 2%, and now here we are almost entering into a deflationary scenario. So this is likely to pro headache, and also the opportunity for the central banks to keep the interest rates at almost 0% and extend the liquidity, extend the credit to the market participants and the economic participants, whoever are in need. Now, coming to the technical aspect, we will cover the DAX and the USD DAX has been on upswing for past couple of sessions now. Even you can extend it to past couple of weeks actually, not only sessions. And though we saw some corrective momentum in yesterday's session, almost 3 percentage point move on the lower side after making highs, but now from those lows, it is again starting to move on the higher side. Though the pace of rise has been not that sharp, but still the momentum is looking on the upside. Coming to the daily time frame chart, here we have this upswing here. This fall was pretty sharp, and also the magnitude of fall was kind of unforeseen, and we didn't really get to see such sharp fall in such short time span. But then this is once in a decade, once in a century phenomena, this pandemic, and so resultantly we saw But then the central bank stepped in, the ECB decided to act, and here we have the liquidity coming in to play, and the central banks are pumping in the money, and that is showing up in the rising prices of the equity segments, the stocks, and now we are back again. And if we get back to these prior highs, you can even say that coronavirus didn't really happen, but that will be only for the stock market participants. The real economy is still reeling from the adverse impact, and I think it will be some time, maybe a couple of years at least, till we get to some semblance of normalcy on the real economic front. But that's another thing. Here we have this bull rally going on, and I think even now the bias is on the long side, and yeah, it will be profitable for us to remain in tune with the market sentiments, and as long as the music is playing, you should dance. That is a well-known saying, and here I think that should be adopted for our trading purpose as well. So the momentum is still strong, and as long as the things are on the bullish side, I would prefer to stay long, and even in today's session. Though we need to be kind of bit watchful as we have the FOMC announcement lined up, and that can have significant impact on the most of the equity indices, even the German one, the DAX, though it is not for the US still. Any announcement coming in from the Fed drives the market, and the Germany, the economic index is no exception to that. So here we have to watch out for some of the key levels. As you can see, the trajectory on the regression front, as well as these standard pivot point series, these are in the bullish territory. Here we had this excellent run starting from 11,600 to almost 13,000, close to that in just a span of little over a week. Then this sharp move on the downside, as I said, while starting the technical aspect of the DAX. But here we are again trading back. I think this is like a scenario in which you can say that DAX is on the crossroad, and next couple of hours price action is going to play a deciding factor. So either way, we might see some extended consolidation, or we might even see the DAX getting back on track and try to regain its this prior swing high and rise towards 13,000. So for that, if we are going to play either way, I think some of the key levels to watch out for is a break above this 50 SMA, and if that comes to if that indeed happens, then we will have the better chance of seeing DAX getting back toward this 13,000 zone, and we can even say that DAX is on track for 13,000. So that is the outcome which we can bet on. But if we get a break below this, and if the price action starts to get into a consolidation zone, then I think be we will need to embrace a scenario where we might see some range bound movements. We are not really experiencing any sharp sudden downside momentum, but I think given the fact that we had this fall, and then we are still moving incrementally on the higher side, so because of that, the chances of DX entering into a consolidation zone remains high, and we might even see these further retest of this immediate swing low, which is there around 12,400. So we can even expect that scenario. So here, watch out for this price action, and break on the either side is going to provide us an opportunity to go for trading positioning here. If we get a break below this 100 SMA zone, then I think around 12,600 or 12,650, we can think about going in for a short sale with a possible target coming in around 12,400, and our stop loss will be just little above this 50 SMA. So any stop loss around 12,750 to 12,800 should be good enough, and that will be the kind of scalping kind of trade, and we don't really get the risk reward ratio of exact 1 is to 2. It will be bit less than that, but then there is a scenario here. And also in the latter part of the day during the the US trading session, North American trading session, we have the FOMC decision lined up, so we need to be careful while taking the position in today's session. As well as we will see the US session begin, the price action is likely to remain very limited, and mostly we will see sideways kind of price action till we get the FOMC announcement, and we don't really have any other catalyst either. So because of that, we might see range bound trading in today's trading session. Now coming to the USD JPY, in USD JPY we have got a break on the downside, and the bears are looking in full control. So because of that, we have seen these almost 250 points, 250 pips move on the downside. We saw the reversal happening pretty close to 110, and now we are back to where it all started, closer to 107. 107. Here we had this consolidation for almost 2 weeks, closer to 107 range, and then we had this breakout, and now those gains have evaporated, and it's increasingly looking like that the trajectory is changing for the USD JPY, and sooner or later the USD JPY is headed back towards 106 scenario, as USD is on the back foot against most of the major currencies. So we can expect the USD JPY to continue to fall, continue to remain in the bear grip, and fall towards 106 area. And if that is going to happen, of course our job is to look for the trading opportunities in which we can indeed make money. So here this is not the right area, right time to go in for a fresh short sale. So here we have this central pivot point of this month's pivot point series coming into play around 107.30, and given that the fall has already happened of almost 250 pips, I would suggest that we should sit on the sidelines for some time, and if we get some corrective momentum, some retracement from the current levels anywhere close to 108, that would be a kind of golden opportunity. And as I said while explaining the equity index of DX as well, we have this FOMC announcement lined up, so that is also going to play a clear and major role in the near-term outlook for the USD JPY. So because of that, I think we should concentrate on consolidation or seeing some retracement in the USD JPY. And of course, the bias remains on the bearish side, so there are no two views regarding that. But this is not the time to go short, of course, and this is not also the time to go long. Here we will need to allow USD JPY some more time on its own. If it consolidates and shows some retracement, and then anywhere close to 108, we can think about going in for a fresh short sale, as we have this resistance zone or this confluence of 50 to 100 SMA, and also we have this break down moment here. Here we had this first small reversal happening, and then we had this fresh and then this consolidation before this breakdown in yesterday's trading session. So this is the price zone which we should target, and that is close to 108.20 to 108.30. So if we see some correction, some corrective momentum from the current levels, and any up move towards this 108 zone, we will need 60 70 pips up move from the current levels. And then after and if actually if there is that movement, and if we see consolidation happening, then I think we can indeed think about going in for a fresh short sale with a stop loss coming in just little above these 100 SMA here, and that should be good enough. Of course, the stop loss is a bit wide, but so will be our target, as we are targeting the price zone closer to 106. So we are looking at a possibility of going with a risk reward ratio of 1 is to 2. So if you are taking a risk of around 70 to 80 pips, the target will be of almost more than 150 pips. So the risk reward ratio has got us covered. And given the fact that the magnitude is larger, the target and the stop loss are in larger pips, so we can accordingly cut down on our lot size, keep the lot size lower, and then our risk will be limited in either scenario. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be pretty happy to take the discussion forward. And before I sign off, I would also like to remind of the risk associated with the use of information. So you should be careful on that front as well. And of course, don't forget to check out the trading platform provided by the Depository Bank SA, for which the links are given below. See you tomorrow. Have a fabulous day ahead. Goodbye.